Hi, this is NIC PIPS, and I teach you how to give your dollars a job. If you're new here, don't forget to subscribe, and if you could, tap the like button. That helps YouTube share this information with other individuals with similar interests. So, I've created a new Telegram chat, so if you can go into the description of this video, click on my link tree, and then go to free Telegram chat, click on that, and you'll be able to join my Telegram and see where I share trade ideas and what's going on with me and when I post new content to YouTube. So let's get into today's content.
Risk. Yeah, hey, honestly, y'all, that's the most important part of your trading, professional trading career is going to be that risk management. Because without risk management, you have no trading career. You're just going to be blowing accounts all day. And if you're blowing accounts, that means you don't have capital, which means you constantly redepositing. And nobody likes that. Who wants to redeposit? When it comes to risk management, I'm just going to share a lot of the tools that I use to manage my risk. So why is risk management important, Curtis? All right. The reason why it's important is because in trading, you want to have consistency. And when it comes to your risk, if you have consistency in your risk, then you know if you take 10 trades and you always risk 2%, right? And you look to make at least 4% on those trades. So that means for every win, you erase 2 losses. So if I take 10 trades and I lose 3 and win 7, so that means on those 7, right, I made 4% times 7. So that's 28, right? But when I lost those 3 trades, I lost 2%, so that's 2, 4, 6. So that's an excellent month or week, depending on how many trades you take in that time frame, right? Anybody that has grown their account by that much consistently over time will not have trouble making money in the foreign exchange market, but you won't have that consistency as far as your account growth without you using proper risk management. And so this is what I want to show you guys, right? And also on top of proper risk management, you definitely want to have a strategy, a consistent strategy that you can call on when it comes to you catching pips in the market, and that's where our Monday candle strategy comes from. So when you think about your growth curve, right, you got your account size over here, how many dollars you make, then you got your time over here, how long it take you to make those. Most of you guys, y'all want your growth curve to look like this. It starts at 0 over here at day 1. You want it to look like this. That's what you want your growth curve to look like. You want to get in after a couple of weeks of watching some videos. You want to copy, paste, and profit and quadruple your account. Well, I'm here to tell you that that's not realistic. Can you do that? Possibly, yeah. But realistically, that's not what's going to happen, right? You sure would be nice, Miss Pip Queen. What's really going to happen with your trading is this is what it's going to look like as far as your growth curve. It's going to take a while. You're going to lose some. You're going to get back to even, may get up. You lose some. Then you come back up again. You know, maybe you lose a little bit. Then again, you come back up, and eventually you hit that point to where you're really confident in your trading. You got your consistency down when it comes to your style and everything. And all of a sudden, you get that nice curve up. Now, that may be month 1 down here. This may be month 18 over here, right? But that's what you're going to get when it comes to your growth curve. This is more realistic right here. You know, you're not going to make $1 million in 2 months. All right, that's just not realistic. If anybody lie and tell you that, run the other way. But when you have consistent risk management, this is what your growth curve look like. So let me go back and let me erase some of this. All right, erase on this thing. No, it's not. So let me just go ahead and just delete it all. So let's look at what it looks like when you don't have proper risk management. If you don't have proper risk management, this is what your growth curve looks like. All right, it looks like this. It looks like EKG. Like literally, you up real good, you feeling yourself, you know, can't nobody tell you nothing. Then all of a sudden you go through that losing streak where the market just take your heart out and you lose almost all of everything that you just won when you was on that little hot streak because of your improper risk management. Then you may get up again, but you don't get up as high as you were before. Then you drop back down again. You just go through this emotional roller coaster, y'all. I'm telling you guys, new traders, do not put yourself through that. From day 1, please have proper risk management processes in for when you take trades, because if not, you're gonna have a tough emotional trading career. So please take the burden off yourself. I tell people, give yourself a minimum of 6 months to become a profitable trader. That's to me, that's as quick as it's gonna get, in my opinion. And that's with diligence, right? Some gonna be, the LeBron James of the group. They're gonna do it in 3 months, 2 months, whatever, right? But for the majority of people, it's gonna take some time to practice it and get this right. So let's go with risk management. One of the most important tools is gonna be right here on the side of TradingView. Now, I don't use MT4, so I can't give you much on MT4 as far as risk management go. You have to do it the old school way with pen and paper and all that. I use TradingView for my setups, y'all. So on TradingView, if you come down 1, 2, 3, 4, 5, 6, 7 spots on this little toolbar on the left, right here, you want to hit this little arrow. Hopefully y'all can see it to the right of this this tool. And the first one is going to be the long position tool, right? If I draw or click on it right there, you see it gave me a long position. If I click on short, you're going to see what a short position tool. And what this tool does is that it gives you a visual representation of your stop loss and take profit. Stop loss being the red part down here, your take profit being the green part. So this is the long tool because, as you can see, the TP is at the top. So that's how we know that this is a long position tool. We're looking to go long on the market. We're looking for price to rise. Now, the opposite is for the short tool, right? We have the TP at the bottom because we're expecting price to go down. And if the price goes up against where we enter the market, that's going to cause us to lose money or have loss. AKA our stop loss, stop that loss. We're waving the white flag. We're going to reset and get in for another position possibly, right? So that's what the long and short tool is used for. I love it because it also gives us another bit of information that I have in my trading plan, which is what we call the risk to reward. If you look right here in the middle of this particular tool, it gives you a readout called the risk to reward ratio. Why is that important? Remember, I just told you guys, if I take 10 trades and I lose 3 and I win 7, but if I don't have proper risk management on my 3 losses, I could have been risking 15% on my account because I was feeling real good. I love those trades, right? I took 3 losses at 15% each. So I'm down 45%, almost half of my account. Well, now what happens? I'm timid, right? Now I'm taking really small lot sizes. I'm timid. I'm scared to take a trade. So now I'm only risking, let's say 3%. So I win 7 trades now. I want to make back 21% of that 45% that I lost. And that sucks because you did all that trading and you in the hole still, right? That's because you did not have proper risk management. But when you have proper risk management, those losses are small, your wins are bigger, and over time, you will grow your account. No doubt. It's just math. Like I say, numbers don't lie. People lie, numbers don't lie. It's better to use tighter stops or smaller lot sizes. Hey, that depends on your strategy, Thomas. Anybody on this call that knows me, I'm a swing trader, so tight stop losses is not in my vocabulary. But I'm not gonna say anything is wrong with them. But hey, the stop loss is gonna be determined on your trading strategy. And to me, stop losses should be indicative of the market and where the market says the stop loss should go. Your stop loss is literally, okay, let's check it out right here. Let me go ahead and look at what's on the screen. You got this right here. This is the beginning of a downtrend, right? We got price coming down. It pulled back, made a lower high. That's lower than this high, so that's the beginning of a downtrend. Then it broke this low right here, and then it made a lower high again, and now it looks like it's going down to possibly form another lower low, right? So if I was to enter in for a sale right here, which is the worst place to get in at a sale, can anybody tell me why this is the worst place to get in at a sale right here? If I was looking to sell the market, when I first got started, that's what I would do. Ooh, it's going down, so let me go ahead and short the market. This is the worst place to short the market. Can somebody tell me why? That's exactly what you're doing, Brian. But why would this be a bad idea or bad place to sell at? Look to short the market. Always look to the left, y'all. Always look to the left. And what's right here at the left? A prior low, right? So look what happened last time this low was hit. Price shot up. So why am I trying to sell it right here? That's the worst place to sell it at. Because price, most of the time, will probably hit this area, consolidate, and possibly come back up. If I want to sell up here near this prior high. I want to sell high, buy low, right? But we're not going over strategy, so let me get off of that. But let's go back to the stop loss question, right? So if I was to take a short right here, I put my short position tool up. This is where I want to short at. To me, the best place to put a stop loss here, if you were going to get in down here, is above the prior high. Because remember, we're in a downtrend. So if price is coming down, it has this pullback, and we expect it to continue to go down. We don't want price to break this high, because if it breaks this high, it's making a higher high. So that invalidates our idea of the price going short. So if you get in way down here, your stop loss is going to be way up here. That's 96 pips in that example, right? So in that case, that trade would have had a pretty nice size stop loss. Now, you could have gave it a tight stop loss and say, okay, I'm going to put it right here. But let's see what the market would have did if you would have done that, right? Where's my tool at? Uh-oh, where'd it go? Oh, here you go. It's down here. Way down here. There we go. Let's play and see. Oh, that was good. That one got you in the profit pretty quick. So that was a good take there, even though it was a bad spot to get in. But there you go. So in that case, you didn't need the 90 pip stop loss. But theoretically speaking, you want to put it at a spot to where if price goes to that level, it invalidates your idea of a trade being short in this example, right? So with that being said, y'all, stop losses, it all depends on your trading strategy. But let's get back on track. Back to the risk reward. So with that tool, let me click it on here again. If I pull my TP down, as you can see, as I'm pulling my TP down, that number for the risk reward gets greater. And what it's telling me that if I stop it right here at 2.0, that's telling me for every dollar that I risk or for every percent that I risk, I'm going to make 2%. So if I risk 1%, I'm going to make 2. If I risk 0.5%, I'm going to make 1% and vice versa. So me personally, 1 and 2 is the minimum risk reward that I'm looking for when I take trades in my strategies, right? But when it comes to our Monday candles and our other strategies, we don't necessarily have a risk reward. We're looking to set a trade at a certain level, let's say right here, and as price comes down, we're going to take our stop loss and we're going to trail it. So instead of having the stop loss at a negative 37 right here like we have it, right? When price gets to this level, which would have been up 27 pips, we go in and we move our stop loss from up here at this level into what's called profit. So we may put it right here at this level where we protect this first, what's that? In this example, 18, 19 pips of our profit. So that way, if the market decides it's going to come back this area and come this other way, we lock in because right here is a profit, a stop profit is what we call it, right? That stop loss is now past our entry point in profit. So no matter what, this trade is not going to become a loser because we've locked in that first 19 pips of this movement. So if price continues to come down like this, then we take that stop loss and we move it further in profit, securing the bag, as we like to say, as we go. Right? So that's the gist of trailing a stop manually, right? And what I mean by trailing a stop for my new traders is that we take our stop loss, which at the beginning of our trade, when we first set it, would have been at this number right here to the right, the 1.65402. But as price came down and we got 30, 40 pips in the profit, we would have taken our stop loss and moved it from that 1.65400 to 1.64800, right? And we would save that modification on our order, and that would lock in the profit of that 19 pips, right? So that's the best way to trade. And what you have to fight when you do this is that word FOMO, right? Can somebody type in the chat? Make sure y'all still alive, that I haven't bored you to death with my talking. Can y'all tell me what FOMO stands for? Share it with the group.
FOMO money?
No, not FOMO money. You sound like you from the hood, man. Really? No, FOMO money. That's a good one. Fear of missing out. That's correct. Thank you, guys. Donnie got jokes back here. But yeah, great, FOMO. Because what can happen is, guys, you can have the price come down and give you profit. You move your stop loss into profit. It'll come back. It'll tap your stop loss. Your stop profit, kicking you out at 19 pips worth of profit, and then continue to come on down. And then now you're doing like my man Brian said, and you're looking to chase the trade, you may hop back in, but I would advise you not to do so. Wait for another set of confirmations for your trade, for your trading strategy before you put in another trade. Just go ahead and take your win of 19 pips and move on to the next setup. Because maybe there's a setup on another pair that you're looking at, or a setup on another trade, right? But please, those are some of the biggest things that you're gonna have to fight, y'all. In my opinion, trading is more of a mental game than anything as far as your emotions go. Once you're able to remove all emotion out of your trading and just trade like a robot, you will become a fascinating trader, right? Because you don't have those human emotions where, oh, well, I lost my last 6 setups like this, so I'm not going to take the 7th. But that 7th setup could be like that gold trade we took that gave us 750 pips. And that's a little bit of me talking about my own personal struggles, because gold has been a particular pair that has kicked my tail in the past. And anybody that's been with us for a while have heard my stories and horrors about me trading gold. But I've learned to control my emotions. If I see my confirmations, if I see my setups, I'm taking the trades. And what has given me that confidence is that word that we talked about. I have very strict risk management. Now, when it comes to risk management, you can set your risk management at whatever you want. I recommend 1 to 3% per trade. So on the light side, I'm risking 1%. On the high side, I'm doing 3%. But for the most part, I never go over that amount right now. Because again, for me, I'm normally going with a 1 to 2 risk to reward ratio, or 1 to 3 or more risk to reward ratio. And that goal was like 1 to 8. It was crazy. And it hit all 3 of my TPs in the span of about an hour and a half. That was amazing. And guess what was even better about that? I was asleep the whole time. I wasn't even up watching it. I set the trade with the sleep and woke up and it was up 750 pips. Well, it had closed out 750 pips in profit. Those are the best ones there, man. But again, that's not always the case, but that one was definitely a blessing. So with these risk to reward ratios, y'all, I'm risking maybe 1% to make what? So 2 times that 1 would be 2%, right? That's what I'm looking to make, 2%, as far as my percentage of account gain, right? Now, if I go on the high side and I say I'm gonna risk 3%, that means I'm risking 3% to possibly make what? Right? 3 times that, so 9%, right? So that's more on the risky side, right? If I'm doing the 1 to 3 risk reward ratio and I'm risking 3% on one side and I'm looking to make 9 on the other side. It's all about numbers, y'all. Numbers. The probabilities. That's what trade is all about. Finding high probability trades and taking them no matter what, because again, all your confirmations line up. Everything that you're looking for as a confirmation on that edge in the market is telling you to take the trade, and you're gonna take it, right? So let's talk about how we figure out all these numbers and stuff, right? When it comes to risk reward. Any questions about what I went over so far, guys? I tend to talk fast, especially when I'm excited, which is pretty much every time I'm talking about trading. So forgive me. But if you need me to expound on anything that I've talked about so far, please drop a question in the chat. Or if you want to unmute for whatever reason, I can let you unmute. I think so. But if not, give me a 555 in the chat and I'll keep on moving. Clear as mud. All right, Marilyn. But you'll rewatch. Okay, cool. So now, if you guys did not know this, every pair does not pay the same, right? If I'm trading Euro AUD and I take a standard lot size and I trade Euro USD and I trade a standard lot size and they both go 10 pips in profit for me, they're not gonna have the same payout. Reason being, every currency pair pays out differently, okay? So let me go to my list. Yeah, let me go to my green list, cool. So Bitcoin, that's a very exotic pair, right? It's gonna pay different than Euro AUD or NZD CAD, right? So let me show you how you figure out your risk management. And anytime you take a trade, guys, any trade you take, you need to know a couple of things. One, you need to know how much is it gonna cost if I lose. That's the very first thing that you wanna worry about. Number one, numero uno. If you do not know how much that trade will cost you if you lose, and you take that trade on a wish, you're gambling. You're not trading. You might as well go on down to Vegas, roll the dice, put everything on red, whatever. I don't gamble, so I don't know what they do. But you guys know, right? You got to know how much it's going to cost you if you lose. How do you know how much it's going to cost you if you lose? First of all, you need to know where your stop loss is going to be. Is it going to be a 20 pip stop loss? Is it going to be a 30 pip stop loss? Is it going to be a 15 pip stop loss? Your trade setup and your strategy will tell you that. If you have a trading strategy like our Monday candles where you technically don't have a stop loss, your stop loss is if a candle closes within your zone, within your zone, then use an estimate. Like for instance, right now, you see this candle right here, these yellow candles are the Monday candles for NZD CAD. Let's hypothetically say that the bottom of this candle right here is where I was looking for a retest and it just retested and took off. So I'm getting into the trade right here. Below here is my zone. So measure and see, okay, if I got it up here at the top, and if it comes back in my zone, let me give a little bit of room. That's about 20 pips. Maybe you do your risk as far as figuring out what your lot size is going to be based off of 25 or 30 pips, right? So let me show you how you do that. This is NZD CAD, right? We're going to use a 25 to 30 pip stop loss. So I'm going to come over here to my FX book, do a Google search for Forex position size calculator. This should be the first thing that come up, my FX book. There's some other ones out there, but this is the one that I use. So let's say you got a $500 account that you're trading with, and your risk profile is you want to be in the middle. I don't want to be real conservative at 1. I don't want to be really aggressive at 3%. I'm going to do 2%. Cool. Stop loss is 25 to 30, right? I always go with the higher the number, right? Then you select the pair right here. We have NZD CAD as the pair that we were trading. Let's go and select it. And then we hit calculate. If you scroll down here, we look down here at the very bottom, it shows us what our dollar amount and money that we're risking. So 2% of our $500 account is $10. So the most I can lose on this trade with this stop loss is $10. I can't lose 20. I can't lose 40. I can't lose 80. Right? Oh, you still see my euro? Okay, I'm not sure why that is, Mike. Is anybody else seeing the euro RD chart still? I'm on NZD CAD now. Okay, so just Mike. Yeah, I don't know, Mike. Check it in there. Maybe your computer froze up or something. All right, so let's go back to the position calculator, guys. So the most I can lose is $10. So what lot size do I put in though, Curtis? Because it don't tell me to put in $10 for my stop loss, right? You're gonna put in your stop loss price, but this is the lot size you want to use right here, y'all. 0.04. So I need to use up now. If it says 0.048 and you want to round up to 0.05, that's cool. But me, I normally like to take the lower of the number, right? Again, because I'm all about risk management, right? So if this number is closer, if it's over 45, I'm taking a higher amount. If it's under 45, I'm taking the lower amount. So in this example, I'll use a 0.04, which is 40 cents per pip, right? But remember, we're looking for 1 and 2 or 1 and 3. But with the Monday candles, you don't have that because you don't know how far it's going to go. So you're going to let it go 20 pips into profit. Once it gets 20 pips up in profit, move your stop loss from that negative 30 to plus 10. So you lock in 10 pips. And if it continues to go up in your favor, you continue to move that stop loss further in profit till you at least cover 1-to-1, which is 30 pips. So once you get at least 30 pips in profit, you may even close the trade at that point and consider that a W, or you move your stop loss in the profit, let's say 20 pips, and see how far it'll run, right? But you got to manage your risk, right? So that way you know I can't lose more than 2% on my trade. Because trust me, as we're going to look at these examples after I get done explaining risk management, there are some times where you have a trade on a Monday candle breakout that'll go for hundreds of pips. If you just trail your stop, you can catch all that. You can risk 2% and make 12% in one day if you catch a runner. Now, you're going to get that every week? No, right? But if you consistently looking at the strategy, consistently in the market, you consistently take the trades once your confirmations line up, over time, the numbers, the math, the probabilities, you know, we've backtested this Monday strategy. You can go, I encourage you to go do it yourself. Go back and find one pair and just go back to the last 50 Mondays mark up the Monday candles, look for a break and retest, and see if you take that trade, if it would have made you money. Guarantee you, you're going to win more than you lose. But again, if you're not using proper risk management, you're not consistent as far as getting in the market, you may have mixed results, y'all. Because again, going back to the numbers, because like I say, numbers don't lie. People lie. Curtis can lie, but numbers don't lie. So anything I ever tell you, go back and fact check it. Don't take what I say as being gospel, as they say, right? Go back and fact check it. I want you to. I want you to. Okay? So, but this MyFX book, I love it. Again, and all I use this for is to figure out what my risk is. Now, when it comes to my trade setup, that's how I know, okay, am I going for 1 to 2, 1 for 1? And a lot of times too, y'all, I look at market structure to give me my TP. Now, this is learning proper risk management. Yes, LaShantia, I'm sorry, I'm jacking your name all up, Miss McMorris, right? Because to be honest, y'all, some people will tell you, okay, well, if you got a $100 account, you use a 0.01, right, for every 100 or whatever, right? So if I got $200 account, I can use a 0.02. But it all depends on that stop loss, because if I got a 35 pip stop loss or a 10 pip stop loss, I can take different lot sizes, right? Because if my stop loss is literally 10 pips, depending on my trade setup, I can take a bigger lot size because it's still only going to be 1 to 3% of my account risk. And again, guys, if you decide, hey, I'm a seasoned trader, I've been trading my particular strategy for 2 years plus, whatever, or a year and a half, whatever, right? And you want to go past that 3%, hey, be my guest. We all grown. It's your account. It's your money. As long as you're consistent, you have a proven strategy that's going to win more than you lose with your trade setup, over time you'll make money. Now, you risking higher amounts. Let's say you want to go with 5% per trade, right? Depending on how your strategy works, as far as when you backtest it, as far as its win percentage, you may have what they call 25% drawdown, right? Where your account is drawing down 25% before you catch a nice win to get you back up into the black or into profits or back to making money more than what you started off with, right? Maybe you start off with $200 right here, all right? And you were doing 5% risk and you lost a couple of trades, 3 or 4 in a row, and you're down 25%. Well, then you win 4 or 5 in a row and you're back up plus 10%, right? Give or take whatever that percentage is, right? When it comes to numbers, but you got to be consistent. When you're taking those L's, you're still risking 5%. When you start getting back to the wins, you still want to only risk 5%. Don't double your risk. And then you take 2 more losses and you just doubled your losses. Don't do that. That's called trying to chase the market, trying to, my mama called it try to be big when small got you. Like, just be consistent with your risk management, guys. If you're going to risk 5%, risk it every time. If you're going to risk 2%, risk it every time. But I advise you to start off low until you get really confident with trading, really confident with how to calculate these stop losses and the risk management. And be honest, y'all, again, if it takes you too much time to figure out what that risk percentage is with this calculator before you can get into a trade and it already take off on you, please don't chase the market and just get in and double your risk because it moved 12 pips in the direction that you wanted to go when you was calculating your stop loss, and now your numbers are wrong. Don't chase it. There'll be more trades. There'll be more. Like this week started off very well for us. We caught some nice runners, but there'll be more tomorrow. There'll be more next week. There'll be more week after that. So don't feel bad about missing those because you want to be safe with your account and protect it and don't chase it. If it's already taken off and running, then you just missed that move. You got to sit on the bench and wait for the next time to get in the game. So I put the MyFX book position size calculator inside of the chat. Y'all want to go ahead and click on it on your browser at home and bookmark it. That'll be a great idea. Again, I don't take a trade without using that. No trades. So any trade I'm taking, I'm throwing those numbers in there. I'm finding out exactly what my risk is. Now, yeah, so with that being said, any questions about this calculator? Now, if you use this calculator for things like exotics or, US 30 and other things like that, it don't work too good. Like if I put gold in here, you see it tells me I can use a $3 pip lot size. That's not accurate. So I would advise you to only use it for Forex pairs. And to be honest, you shouldn't be trading those other things anyway right now, especially if you're a newer trader. You want to stick to Forex pairs. So you see with AudiCAD, I can use a 0.04 lot size, but let's see what happens if I go to AudiUSD. See, I use a little smaller lot size because the price per pip for AudiUSD is a little bit more expensive, so you have to have a smaller lot size, where if I go to an Audi Swiss or AudiCAD, you know, I can use a little bit bigger lot size because those cost me a little bit less per pip, if that makes sense. And again, it's because every pair does not pay out exactly the same. If I come down here and put in Euro GBP, watch what happens as far as the lot size. See, I'm down to a 0.02 because that Euro GBP is going to cost me a little bit more per pip. Even though I'm using the same account, right? This is how you know exactly how much it's going to cost you if you lose a trade. All right, so let me show you guys the power of compounding and how just a little bit. That's all you need, just a little bit of one step in the right direction consistently over time is going to get you a long way when it comes to your account growth. All righty, let me get this up. Drop a question in the comments, y'all, if y'all have any comments, or give me some feedback. Let me know y'all still there. It's kind of quiet, except for Miss Marilyn. Want to make sure y'all still there, that I haven't lost you. Still here. There you go. Cool. So we got what, 45 on the call? Cool. So hope y'all can see this. Let me zoom in some. Cool. So check it out. Now, $2,500 for a starting account for most people is probably not going to be realistic. But let's say starting off with $250, right? And let's say you're going to be very conservative, like Curtis. You know, I'm going to use 1% per trade, but I'm going to be looking to get 2 to 3% per trade. I'm going to put 2%. Let's say you're going to get 2% per trade on average, right? So check it out. $250 account, you're only making 2% per trade. After taking 60 trades, that account is almost triple. Actually, almost quadruple, right? After 60 trades. Now, that depends on how often you trade, how many times you get into the market. I'm not saying chase trades because you want to hurry up and get to the $800. I'm just saying if you're patient, you wait for the trade setup, you take trades that are high probable. You're not just gambling because you're like, oh man, it look okay. I'm gonna take it anyway because I got to get to the $800 before the end of the month. Don't do that to yourself. But I'm saying if you take your time and manage your risk and grow slow, the Warren Buffett method, right? 2% a day, or per trade, I'm sorry. After 60 trades, on average making 2% per trade, your account is almost quadruple. And let's do that again, starting off with $800 now. Now $250 account is $8, but we're using the same 1% risk. And we take another 60 trades, now that $250 account is almost $2,500, give or take, depending on, you know, again, because again, you ain't gonna always hit exactly 2%. Sometimes you may get a nice runner and catch 8%, so the number might actually be higher than this. You see what I'm saying? Slow, consistent growth is not bad, y'all. It's less stressing. It gives you more margin for error, because if you're wrong, you're not blowing your half your account and having to go sell cans, do whatever to get more money to put into your trading account, right? Right? So again, that's 120 trades on a $250 account, making 2% per trade. You're up to $2,500. Let's do that again. And we're up to $2,500, but we're using the same 1% risk and the same 2% for the reward. Another 60 trades, now that account's up to almost $8,000. Come on, y'all. This is slow and steady. And again, I'm lowballing it, y'all. I'm just gonna be honest with y'all. I'm lowballing it. When you get real consistent, you catch a strategy that you stay focused on, you stay disciplined, you'll laugh at 2% a day. You'll be blowing that out the water, man. By this point, your account is up to $8,000. Now you're real confident in your trading strategy, right? So you're gonna go a little bit higher on that risk profile. You're gonna be risking 2 or 3%. Now you're making about 5% a day, or per trade. Now per day, per trade. Now look how good it gets, y'all. You're making $400 a trade. Now this is almost 180 days later, 180 trades later. But come on, y'all. This get real nasty. When your account size get big enough and you got that discipline, as far as they're trading the same strategy for the last 180 trades and the same setup as far as the risk reward ratio and the same risk percentage. Y'all, how can you lose when you trade that way? Mathematically, it's impossible for you to lose when you have all those things in place. A proven strategy that you back tested and seen with your own eyes the last 100 times, it hit 80 out of 100. You can't lose. It's impossible. Let me calm down. Woo. All right, Marilyn says, Curtis, may we see the names of the columns, please? Yeah, Marilyn, I'm gonna tell you, ignore those other columns, but let me show them to you. So what those other columns signify is the daily growth goal, as you saw me change that, the daily profit goal. So this shows you the dollar amount. Now this is based off of if you're trading like a USD pair, right? Because I just showed you guys, if you trade like an NZD CAD, it's going to pay less per pip. But again, we're looking at percentages, right? So you should be okay if you use that position size calculator that I told you about. You should still have the same percentage of risk, and then your reward should be equivalent, right? But it's going to be off a couple of cents, give or take, either up or down on your trade, depending on the setup, right? But over here, it just shows the possible lot size. I don't use this anymore because, again, to get my lot size for my trade, this is the reward, right? This is saying that if I risk 5%, I make 5% in this example, right? So I would use a stop loss of, if I was had a 20 pip stop loss, I would use a 2.0 in this example. But remember, I just told you guys, it's not going to be this cut and dry where I'm using exactly 30 pips. I may be using a 32 pip stop loss. But I'm not risking 5%. I'm looking to make 5% on this trade, but maybe on that trade, I'm only risking 2.5%, which is half of that, because I don't want to risk 5% per trade. That's why I go back to this calculator. Put in my $8,000, 2.5%, 30 pip stop loss on NZD CAD or whatever. It don't really matter what pair. Let's say AUD USD. So this is going to be my lot size that I use, 0.66, not the this right here, what it says. See, it says I can use a 1.33, which is a standard lot. I'm not using that. I'm using this right here, $6 and some change, $7 a pip, give or take. Does that make sense? You all fired up tonight. Oh yeah, that's every night, Kristen. You know how I do. Because when people say that Forex doesn't work, it's a scam and all that other stuff, I take it personal. Because as I just showed you guys, the mathematics of it, when you take out the emotions and you're consistent, you're not jumping from strategy to strategy. Ooh, this is good today. Ooh, that's good tomorrow. Ooh, that sounds good too. When you're doing all that, yeah, you're gonna have mixed results because you're always a student. You're always relearning everything, right? If you just, do like the horses on the racetrack, man. Put on your blinders and just have your eyes on your goal, which is a profitable trading account. I'm hoping, right? Yeah, drop in the chat, y'all. How many strategies you think you need to be a successful trader? Somebody drop it in the chat for me. Drop your ideas. Don't be shy. Man, that was quick. Good Lord. Y'all must have heard this talk before from me. Just one. That's it. I don't need 35 trading strategies. I don't need to be the master of all. One ring to rule them all. That's all you need. I showed my team one time and said, man, literally, you can just go through the market and just look for one particular edge and just trade that consistently over time. You're going to make money. We used to use what was called the moving average strategy. I'm not telling y'all to go do this. All right, don't go tell Al what Curtis said, right? No, I didn't. I'm just telling y'all what we used to do back in the day. We take a moving average, 50, exponential moving average. We made it red, and we thicken that girl up so we can see her. And bam, if price was above that line and retested like this, he bought, right? Right? If it was below that, it retested, we sold. It didn't retest right there, right? Right here, retested, we would have tried to sell, and then we would have lost right there. Oh man, we lost the trade. But now it's above it. We tested above it. Now we're buying, so we made our money back, right? Literally, that's all we did. If you do that every day, all day, and again, I wouldn't suggest you do that, guys. That was way back in the day. We have much easier trade setups, much more profitable setups with a higher accuracy as far as the win percentage. I think this was around 60, 70% when we back tested it. But that's literally what we used to do. Right here, look at this. We got a break above. Let me zoom in so you can see it. Right here, we got a break above, a retest, and you buy it. You buy it right there. That was a quick 28 pips. right? Then you have to stop profit in place. So maybe it came back and hit that 10, 15 pip stop profit and went down below. And it looks like it's trying to retest it. Didn't really touch it yet. So maybe right here is what we would get in for the sale where it touched it right here. Then we got a red candle. You know, look how easy that is, man. That's 18 pips. Let's say you back tested this 100 times and on average it gave you 35 pips, right? So when you take the trades, you look for 20, 25. Take the easy road. So it's all about mathematics and probability. Like, you don't need 50 million strategies, man. You just need one that you know and that you watch out for and that you trade consistently, and you always risk the same amount, because guess what? You're not going to win every trade. No matter how many times you saw in the past it win, that don't mean it's guaranteed in the future. But numbers, math, probability is always in your favor when you're consistent. Not jumping from a 25% win ratio strategy to a 50% one, to 80% one, back to a 30% one. And a lot of times we don't even know because we hadn't back tested it. I'd advise you guys with any strategy that you're going to be trading, always back test it. Don't matter what me and Al or Donnie, whoever educators say how fire it is. Ooh, harmonics are 88% accurate. So now you just going to start trading harmonics because somebody said it was 88% accurate. Go back and see for yourself. I'm just saying harmonics as an example. I'm not telling you go back test harmonics, but my point is, whatever it is, if they say it's what it is and it really is factually true, it should be able to withhold back testing. Period. End of discussion. And that's most definitely Christy. Christy took the words out of my mouth. Back testing helps train your eyes. Let me tell you something else that back testing does, y'all. It gives you confidence in taking the trade. You're not scared. You're not shy. You're not second guessing the shot. You're trading like a robot now because you've seen it 100 times before when you back test it. So this is the 120th time, 150th time you done seen it. So now you really understand, oh, this is what a Monday counter breakout looked like. Or this one right here, when I was back testing, I noticed when it broke out like this and retested it, that it really did, you know, I didn't get a win on that one. So maybe on that one, you don't take it, or you take a lower risk on that one because of the way it looks, because of your eye being trained. But Brian, there you go, baby. Take the trade with confidence. Take the trade with confidence. Yeah, so you're giving us so much needed tools. Most definitely, Marilyn, because at the end of the day, y'all, the most important asset when it comes to trading is your capital, is your account. Unless you're demo trading, and that's the case, you know, you ain't making the money, right? Because that's demo trading. But it's necessary to train you on utilizing the tools. Did you make a mistake in your demo account with this lot size? You're trying to put in a 0.60 and you accidentally put in 6.0, you hit that button on your live account and you made that mistake because you just really didn't know what you were doing, or you wasn't paying attention. And I've done that before, by the way. My heart dropped, right? And that trade going the wrong direction on you, you may be down half your account before you even know it, to get to the button and hit close that trade. But you want to get all those bugs out, all that, butterflies in your stomach about the trades through the back testing and the demo trading, right? Nothing wrong with demo trading at all. So with that being said, y'all, we're getting very close to 7 o'clock. I know we have that boiler room session normally around this time, so I don't want to eat into Josh's time for the boiler room for our builders in the family. Before we get ready to go in about 5 minutes, does anybody have any questions over risk management and how to calculate how much they would lose on a trade? Because again, that's very important. Now, how much you're going to make on the other end, it's all depending on the strategies you use and different things like that. But you'll develop that more over time as you continue your trading career. But risk management, you definitely want to have that tied down, especially when we send out trade signals through the chat. You know, I send out a lot of trades. Matter of fact, let me show y'all one. Where is it at? No, not that one. NZD CAD. That's the one I just sent out not too long ago. Was it NZD CAD? But long story short, no, it was GBP AUD. That's what it was. Let me go to my other setup. Yeah, don't forget to drop your questions in the chat, y'all. All right, no questions? That's good. Guess I explained it right. Ignore all that, y'all. Right, check it out. I had a 140 pip stop loss, right? Look at that, 140 pips. Go back to the position size calculator. You got a $250 trading account. Curtis sent out a trade. Oh, let's say you're gonna risk 2% on your account, and it's 140 pip stop loss. Right? Oh, you can't even. Okay, I did something wrong. Oh, I guess you could take that trade. No, you can't. Look at that lot size, y'all. Can somebody tell me what's the smallest lot size you can take in MT4? What's the smallest lot size you can put in? Correct, right? A 0.01, a micro lot, right? That's less than a micro lot. So guess what? You can't take this trade. So if I send out a trade, and I don't mean going here and say, okay, well, I'm up my risk. I'm gonna risk 5%. Oh, I still can't do that. Ooh, I'm gonna risk 6%. Okay, now I can take the trade. That's not what I'm teaching y'all today. I told you stick to the same risk percentage. So 2% is your risk percentage. That's what you stick with. Oh, I can take that trade. Or you take a lower lot size. Lower stop loss. Maybe you say, okay, I'm gonna take half of that, Curtis. I'm gonna do a 75 pip stop loss. Still can't take that trade, right? But be careful though, because 9 times out of 10, the stop loss is down here. It needs that room. Because look at this right here. That trade almost got to that stop loss. It literally got about 35 pips away from that stop loss. So you to try to be slick and put half the stop loss, it would have kicked you out and then went up 140 plus pips in the profit, and you'd have missed all that because you were trying to use a tighter stop loss. So please, y'all, be disciplined, be consistent. Yep, sit on your hands. That's right, Tabitha. Sit on your hands. There'll be more trades. Trust me. They come every day, every hour, depending on your the strategy that you trade, right? That gold trade was just beautiful. Look at that, boy. We caught all that drop. Ooh, 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 ooh. Look at that, y'all. That was nice. All right, y'all. Y'all didn't put any questions in the chat, so I'm assuming everything that I went over was crystal clear, made sense. Again, guys, do yourself a favor. Go and back test these strategies. All right, practice them. Take detailed notes when we're doing these trainings, so that way you don't miss anything. And just give yourself time to grow, y'all. Don't put too much pressure on yourself to to master the skill set. All right? Because guess what? Once you learn this skill set and you got it, can't nobody take it away from you. And like I was showing y'all on this spreadsheet, man, you have $8,000 on the account. Imagine that account is $25,000, y'all. You doing the same 5%. Look at what you make in a day. I mean, not in a day, a trade. So you happen to find 2 or 3 setups and you take them, you just made 12, 5, maybe 13, another 13. That's almost $5,000. $4,000, about $4,000 in one day. Oh, I'm just saying, but you got to crawl before you walk. You got to start off down here at the bottom, y'all. $25, $250 account, making $10, $12 a trade, or whatever that may be. Remember, we was at a lower risk at that time, right? We're making $5 a trade. Nobody's excited about that. But guess what? That's the beginnings of a phenomenal trader, because everybody had to start from ground zero. You can't start at ground zero and get in the game and be starting in the NBA Finals. You got to work your way up. You got to go do some things. You got to get into the gym. You got to practice. So if you ain't in the charts practicing, you ain't in the gym practicing, you ain't back testing, you ain't serious about trading. Let's just be honest with it. I'm just going to take the trades because Curtis said they're going to hit. He says hard money is 99%. I'm going to take every trade to get. I'm throwing the house on it. No. Every one of my trade setups, I'm telling you, right there, right here. See that big old right here? Always use proper risk. I know how some of y'all are. Oh, man, the last 5 he said, man, they were fire. Oh, he just caught 750 on gold. Oh, man, I'm taking this one too, man. I'm putting the house on this time because I know it's going to be good. Then you blow your account and you're going to be mad at me. Oh, man, I know I shouldn't have took that trade. Remember, I told y'all that. I just went live last week. I needed this. Thank you, Jason. I'm going to get with Al. I don't know if he can upload this or put it anywhere, but it is being recorded, it looks like. So it should be available. But let me find out on that with you guys. Yeah, if it works on the works, I can do another one again, Jason. Hey, big NZD news tonight. There you go, y'all. If y'all in the NZD pairs, is that the one I'm in? I'm in GPBRD. Yeah, I'm not in NZD. NZD CAD. I think I'm already out of that one. That one hit my stop profit. It came down, hit my stop profit, and took off the other way. But yeah, thank you though, Christy. Cool, cool. All right, good folks. Hey, I'm gonna let y'all go ahead and go. It's almost 7 o'clock. Almost time for the boiler room call. All right. So again, remember y'all, risk management. If you don't know what you can lose on that trade and you're not okay with it, please do not compromise your trading plan and increase your risk for that one trade, because that could be the one you lose. Then now you gotta double up just to get back to break even. So stick to your plan. All right. Y'all have a good day. Be blessed.